Call me hubby. That's what my wife gave me. Uh, no, so a lot of you may have heard this week's market update about the Fed cutting the rates. Yay, that's awesome. And you might assume mortgage rates corresponded and dropped, right? But that's not exactly how it works. So here's the truth. The Fed controls the short-term rates like credit cards, auto loans, HELOCs, overnight lending rates to banks for banks to borrow the money, right? Well, mortgage rates are a little different. They move with the long-term treasury bonds. So a lot of times mortgage rates, you'll see they mirror uh, US Treasury. So like the 10-year Treasury is what I follow. So when the Treasury goes up, the price on Treasuries, mortgage rates go up too. What that means is mortgage rates can go up even if the Fed is cutting rates based on certain news, certain announcements, different things happening in the world. Um, or mortgage rates can also drop before the Fed makes an announcement in anticipation of what they're going to say. So what do we actually watch? Not the Fed's headline. By the time you hear the news, it's old news. We watch the bond market, specifically the 10-year treasury yield and the mortgage-backed security spreads, because that's what sets the stage for what mortgage rates will do. So if you're house hunting or refinancing, don't base your timing on a Fed announcement. Let's track the bond market together, and I'll help you adjust your strategy as these indicators start moving. All right, hope you have a great day.